Hey everybody, here is your market minute for Sunday, the 11th of June. It's really a tale of two markets at this point. Here is the S&P 500. Forever, it seems like we were talking about this 4,200 level on the S&P and whether or not we could see the price break. Well, last week it did break above it, and now literally in no time at all, we are up at 4,300. So that is very typical of prices when they explode into a new defined bull, that they typically go from round number resistance to round number resistance pretty quickly. So we're looking to see whether or not we're going to see 4,400 in the near future. Now, a lot of that depends on what happens this week, obviously, with the Fed. I'll get to that in just a second as we talk about the NASDAQ, which is the other chart we need to look at here. The NASDAQ has been the main driver of the S&P over the last several weeks, especially since the bottom in the beginning of this year, where we've had an unbelievable move, quite honestly, and a lot of this is powered by the promise of AI. Be that as it may, we do have a weekly exhaustion signal on the NASDAQ 100, and you can start to see that this past week, it pretty much was just treading water due to this exhaustion signal. Now, here's the interesting thing from a technical perspective before I get into the Fed discussion, is that the daily chart has been doing the hard work of consolidating for the past week plus, and it now has built up a lot of energy, which gives it the potential to go up or down quite a bit in the near future, perhaps aligning with the Fed meeting. Now, typically when I see this happen, where we have a daily chart full of energy and a weekly chart which is in exhaustion, it's difficult for the price to go higher at this point. It's much easier to make everybody happy by just allowing it to pull back. So this allows the weekly chart to charge up higher and set itself up for the next move. This makes the daily chart happy because it gets to move. And this is typically how we see markets move, is they go into range expansion, then they go into range contraction till they build up the energy again, and then it's the next range expansion again. Now, obviously, we have the big Fed announcement coming up this Wednesday, the 14th at 2 p.m. Eastern time, with a press conference after that. So we all know that, and the Fed has done a pretty good job of telegraphing the fact that they're probably going to pause this week. So no interest rate hikes, and certainly they will make some kind of statement about being data dependent going forward. What they're doing is they're allowing some of these past interest rate hikes to kind of catch up with where they've been, because there's so many lagging effects when you start to raise rates. But certainly what's going to drive the discussion for that is going to be the results of the CPI and PPI, which are coming out on Tuesday and Wednesday morning. Particularly the CPI, which was pretty hot last time around at plus 0.4% month to month. This one, there's a pretty hard bogey to hit of 0.2% positive month to month. So this needs to make a dramatic shift back down this month. Otherwise, we will see a pretty quick reaction, not only from the price, but also by the Fed itself. So if this CPI number does come in hot, there may be a possibility that the Fed does not pause on Wednesday and says, sorry guys, we got to keep the hammer down. And same thing goes for Wednesday's PPI. Prior was 0.2% month to month, and this time they're looking for a reduction in wholesale inflation on the producer price index. So again, a really aggressive bogey for them to hit by Wednesday morning. And I think this lines up with the charts that we may get a very minor sell the news event, because the markets at this point has really nothing else driving it until we get into earnings in the middle of July, where the big bank earnings will start on the 14th. The charts need a pause, and I think this week might give them the sell the news event that technically the markets are looking for. That's it for today's Market Minute. Have a great weekend. We'll see you in the next one.